is the best leverage to use for crypto trading? Now, this is a very, very common question I do get, and a lot of people face this challenge of knowing the exact leverage to use. Especially if you are trading crypto, it's similar to saying what is the best lot size to use. And I have a previous video where I explained how leverage works, right? That was about explaining how leverage works and how it affects your trade. But in this video, I'm now going to be explaining the best leverage to use for trading. For some people, they'll say trading with 10x is good, trading with 20x is fair, trading with 50x is too much, trading with 100x is extremely risky, trading with 5x, whatever the case might be. I'm here to tell you that the leverage you use doesn't really matter. Yes, the leverage you use for your trades doesn't really matter. What matters is the position size. How much are you opening that position with? Okay, so how much are you opening that trade with? That's what really determines your leverage, the leverage that is best suited. So without wasting too much time, let's dive right into the practical where I'm going to be showing you. I'll be executing a couple of trades. I won't take those trades, but we're going to just look at the estimated profit and loss on different leverages, and then you see that everything can still equate to the same amount of number in terms of your loss. So it's whether you use 50x, whether you use 20x, whether you use 10x, whether you use 5x, it doesn't really matter. What matters is your position size. All right, let's dive into it. So as you can see here, this is a live account, a small live account of $500. This is not demo, this is a real live account here. I funded this with $500 because I have something I want to do with it, but it is also a perfect account size that is relatable to most people, because if we want to use 10,000, 100,000, it might be confusing, but $500 is something relatable that most of you guys can relate to in terms of capital. So now let's start with the very smallest you can think of, 10x. Let's use 10x and see. Okay, so now this is 10x. Let's imagine you want to buy up. Ignore the current price. The current price of Solana is 170. Let's just say you want to buy at 100. Okay, you want to buy at 100. If you do not understand this aspect, I have a previous video where I explained how to open order, how to close an order and all of that. So I wouldn't be explaining what that entails in this video. We are just going straight into the pro level of leverage. So now let's say you want to buy your price at $100. Okay, and now, following proper risk management, you're supposed to be risking just 1% of this account, and 1% of this $500 account is $5. So which means regardless of the leverage you are going to use, you shouldn't be risking more than $5 per trade. So let's get it. So let's say you're opening this trade with 50% of your margin. That means the cost for this position in terms of long is going to be 145.5. Again, if you do not understand this part, watch the previous video where I explained how to open and close orders. So set your TP and SL. Okay, click on this. Now our entry price is 100. We want to buy at 100. So our stop loss is going to be, let's use 97. So let's say stop loss is 97, and then take profit is what? 1:2, so 103. So we are risking 106 rather. So we are risking 30% for 100%. Sorry, 30% for 60%, 1:2. Now, looking at this, you can see expected loss is $43.2. This is too much to risk per trade. Now we want to narrow it down in a way that we can risk only $5 using 10x leverage. So how do we do that? Let's see. That means the only way we have to do it is that the position size is too much. We need to reduce the position size. Let's say we reduce to like 10%. Now let's check. Now you see we are expected to lose $8.4. I did not change anything. The leverage is the same. The only thing I changed was the position size. So that's why I say the leverage you use doesn't matter. It's the position size that matters. Okay, so it's still too much. Let's reduce this from 280 to like 150 here. So we want to open this position with $15. So let's look at it. 4.5. All right, 4.5. We could say 160. 4.8, which is nice to use 4.8 because keep in mind your broker is going to charge you commissions and all, which will definitely sum up to 5. So you do not want to be risking exactly $5. So 4.8, perfect. So as you can see, we are risking $4.8, which is approximately $5 on this trade using a 10x. And then how much are we going to be executing this order with, this position with with $16. So with $16, 16.16, this position is going to be opened with 16.16, and then $5 approximately is at risk using 10 times leverage. So now let's try 20x leverage and see the same very signal, no stress, just 20x leverage. Now let's see 20x leverage here. If you come here, you see everything might be scattered already. So now let's adjust again. I think we used 160 then, yeah? So look at this. With 20x leverage, I'm trying to make it understandable. Okay, so with 20x leverage, we can just adjust this to like 160. And we are risking 4.8. But how much are we going to be opening this position size with? Take a look at it here. The cost, $8.17. Remember, when we were opening the position with 10 times leverage, it cost us $16.16 to open that position size in order for us to risk $5. This time around on 20x, the position size came down to 8.17. So whether you use 10x, whether you use 20x, we will still be risking $5 on the trade. But my position size on 20x has to be more lesser. So the lower your position size, the higher the leverage you can use. Okay, so let's try 30x. Now in 30x, look at this. We are still expected to lose $4.8, right? $4.8 is expected to be lost. But look at this here. The cost to take this trade keeps going down. Now 5.5. So it cost us $5.5 to take this trade. $5.5 is what we need to open this trade in order for us to be risking what, $5 on this trade. So that is just how it keeps going down and down and down and down. Let's look at it at 50x. So with 50x, we are still going to be risking 4.8, right? That is true. But look at how much we need to open that trade. We need to open the trade with $3.3. So technically, the higher your leverage, the lower your position size. If you open your position size with something still high, you'll be putting your account at risk. So there is no best leverage to use. You can use high leverage, you can use low leverage. You just need to understand position sizing and understand how much it is you are required to open that position size, and make sure your calculation is done right before you can execute that trade. But at the same time, if you want to be on the safer side due to volatility in the market, I would recommend you use around 20x. So if you use around 20x, it is much more better. So you see, with 20x, we need to open the position size with $8.17, and then we'll still be risking 4.8. So as you can see here, um, that is it. So the higher your leverage, the lower your position size. The higher your position size, the lower your leverage. That is the simple rule to understanding which leverage you want to use. So if you're someone that has a very small amount of capital, you have a very small amount of capital to trade with, then yes, you need to use a very high amount of leverage. But if you have a big capital, or your capital is quite big enough on the trade, I see no reason why you should be using a very high amount of leverage, because you have enough capital to cover for the cost of your trade. But if maybe your account is just with $5 or $10, then you can use extremely high leverages just to be able to open your position with a lesser price. And then I think I've explained it clearly. If you have any questions, you could ask me in the comment section and I'll be happy to explain it to you. So, in summary, the higher your position size, the lower your leverage. The lower your position size, the higher your leverage. As simple as that. But if you ask me which leverage do I trade with, I trade with 20x leverage. I do not want to be using a leverage that is too small. At the same time, I don't want to be using a leverage that is too high. I just stay in the middle, and that's what works best for me. Doesn't mean it should be what you use. You just need to understand how it works. And I'll see you guys in the next video. Stay safe.